night, with the Dow up 75 points today in a show of strength, I like the action. I'm hanging up my bear stripes. I'm saying if the market hasn't already completed its correction, then, folks, I think we're getting awfully close. We have a special guest joining us right now to talk about this, my old pal, outspoken buddy, Jim Rogers. He's the chairman of Rogers Holdings. He's no stranger to bold market calls. Jimmy, nice to see you. Jimmy, I want to buy the market. I think the correction's gone far enough, maybe another 2 or 3% to go. What's your take? I'm challenging you. Would you buy the market now?
No, but I'll probably sell it to you, Larry, if that's what you want. No, I am long commodities, I'm long currencies, and I'm short stocks.
You're buying commodities. Okay, I want to challenge you. I think the commodity rally's over. End of QE2. There won't be any QE3. I wouldn't be buying commodities. That's one of the reasons I'm bullish. Oil has peaked. Copper has peaked. Gold maybe not peaked. But I think the commodity inflation play is over.
Larry, if the world economy gets better, commodities are going to go up because there's shortages. If the world economy doesn't get better, commodities are the place to be because they'll print more money. That's all they know in Washington. Print money. It'll be back.
Every central bank virtually is stopped printing money, James. I got to challenge you, my friend. The Chinese, the Indians, the Brazilians, the Europeans, and yes, even for the moment, it looks like the Fed will end its money printing. Now, I know the Fed is still going to be zero interest rates. I get that. But, Jim, I don't think you're right. I think money printing is all of a sudden out of fashion.
Larry, what I said was if the world economy does not get better, they're going to start printing money again. Larry, if the world economy doesn't get better, you're not going to make any money in IBM or Toyota. You might make money in commodities because they'll print money again.
How about stuff like Caterpillar and DuPont and Chevron Oil Company and 3M? They all had very good days today. Bunch of financial stocks surprised everybody with good days today. How about those cyclicals, James?
Well, Larry, one day is not the market, for goodness sakes. I don't even know what happened in the market today. Apparently it went up. But that's irrelevant to what I'm talking about. Over the next few months, I am short technology stocks in the U.S., I'm long commodities, and I'm long currencies for the reasons I said before.
Let me just go back to some basic fundamentals, because I'm basically saying buy the index right now. Maybe the correction has another 2 or 3 percentage points. I'm not smart enough to know that, but I think most of it's over. Cash-rich, pristine balance sheets, and very profitable American businesses. It's a global play. It's a domestic play, Jimmy. What's wrong with that? Why shouldn't people buy the index?
There's nothing wrong with that, Larry, if the world economy gets better. What I'm saying is I'm not smart enough to know if it's going to get better or not get better. If it gets better, I'll make money in commodities. If it doesn't get better, they'll print money, and I'll make money in commodities.
What about comparative yields, all right? If I mark down earnings, which have gotten to $100 a share, which got way out of hand, the economy's not going to grow that well. We're in a jobless recovery. I acknowledge all that. If I take earnings down to $95 a share, maybe $93 a share, that still gives me about a 13.5 times multiple on the stock market, Jim, which is pretty attractive. The yield would be 7%. I mean, heck, Treasury bonds yield 3%, corporate bonds yield 5.70. Therefore, aren't stocks still attractive?
Well, Larry, yes, if things get better. But the world economy is not getting better, especially in America. The only people that are better off in America are the people that are getting the money that the government is throwing out the window. The overall situation in the U.S. is not better for the rest of us. The debt is staggering. I mean, we've got serious problems facing us.
How about a nice debt ceiling limitation deal? Let's say $400 or $500 billion of spending cuts. They get the debt ceiling done on time. Obviously, it's never going to be a default in the United States. Isn't all that debt ceiling stuff kind of overrated? I'm taking that out of the stock market equation.
Larry, $400 or $500 billion spending cut is nothing. Our deficit is $1.5 trillion. What are you talking about? That's not going to solve our problem. The debt still goes up by $1 trillion a year.
Well, we got to start someplace. We got to start someplace. All I'm looking for is a little hope here. I'm looking for a little bit of optimism this evening.
Well, by all means, but getting deeper in debt by $1 trillion a year is not optimism as far as I'm concerned.
Well, it ain't perfect, but I don't know. There's talk about tax reform. We're going to get to that later on in the show. Jimmy, let me ask you about another thing. M2, a good measure of the money supply, is suddenly growing the last 2 or 3 months at about 8% a year. And C&I loans, business loans, are suddenly growing at 11% a year over the past 3 months. Is it possible, Jimmy, that all that money put into the banking system might now come out on the other side, finally? More loans, more money supply, maybe even better activity. Is that possible?
Well, of course, anything is possible. What you're saying is it's just going to sit in the banks' treasuries. They're just going to keep it in their vaults and do nothing with it? If that's the case, Larry, the economy is not going to get much stronger.
Well, I'm saying the M2 numbers look like something's going on. Maybe it's circulating in the economy, finally, at long last.
Larry, if the M2 numbers are going up, you better buy some silver. You better buy some rice. You better buy some real goods, because inflation is going to continue to get worse. Everybody watching your show, Larry, knows that there's inflation in the land. Protect yourself.
What about China? What about India? What about Brazil? Last round, Jim Rogers.
Well, they're all three cutting back, and deservedly so. They're raising interest rates. They're trying to do something about inflation. America says there is no inflation. How can you possibly believe those guys in Washington when they say there's no inflation and everybody else in the world knows there is?
All right, Jim Rogers, hang on a second. We finally got Bob Dole out of the hurricane. He's the vice chair and chief equity strategist for fundamental equities at BlackRock. Is Bob Dole really here? Where is he? All right, on the phone. Bob Dole, I'll take you any way I can get you, in person, on the phone, by snail mail, by whatever source. I'm trying to make the case that the correction is coming to an end. I'm trading my bearish stripes for a more positive market outlook. What are you thinking, Bob? Am I in the game here or not?
You may be a little early in terms of time, Larry, but in price, I think you're not far away. I think we need some resolution to how much of the slowdown in the economy is related to temporary factors, Japan disruptions, China slowed down, abnormal weather in the U.S., and how much is related to an actual slowdown in final demand. I think it's more the former, and we will have a pickup, but it may take another jobs report or two before we have a little more about it.
But Bob.
Yeah, go ahead, Jimmy.
Bob, what's going to cause the economy to pick up in a quarter or two?
Well, we're going to have auto production once the Japanese supply line and production issues slow down. That's going to add as much as a point. Some are saying 1.5 points to GDP as that has come to an abrupt halt. So we will get some improvement in the economy. We're not going to get a robust economy. We'll go back to kind of where we were, 2.5-ish, 3 if we're fortunate, not 1.8 like we saw in the first quarter.
You know, Robert, I think it's a jobless recovery. I'm not optimistic about that. I think you're right about 2.5%. But in terms of what'll drive the economy, or I'm sorry, what'll drive the stock market forward, Bob, what about pristine balance sheets, phenomenal cash flows that companies have, and even if I take 5, 6, 7% off of the profits estimates, I go from $100 a share down to $93 a share, I still have a fairly cheap multiple in the stock market of about 13.5 times earnings. Why isn't that a pretty good investment really across the board?
I think valuation absolutely gives you a sense of risk-reward. I'm not sure it tells you exactly when to buy or sell stocks, but I agree. We just need some confidence so corporations put some of that cash to work. As you know, corporate America generated $500 billion of surplus free cash flow last year, and that's sitting on the balance sheet. So if we can unleash some of that, some confidence, we will have inordinate increases in dividends, share buybacks, mergers and acquisitions, and good old-fashioned business reinvestment. But I just think all that's going to take a little more time.
Would you invest all your money in Jimmy Rogers' commodities play? He's been selling me commodities tonight. Would you invest all your money there?
Yeah, look, global growth is still happening, and I think commodities are the beneficiary of that. Again, like equities, I think it's going to take a little more time before people have confidence to go back in, but we've not seen the high for commodities in this cycle, in my view.
Oh, see, he agrees with you, Jim Rogers, but I want to just poke a little bit at your thesis. What if the dollar goes up rather than down, James?
Larry, even if the dollar goes up, we have shortages of everything developing. Larry, the inventories of food are the lowest in nearly in recorded history. the average age of farmers in America is 58 years old, Larry. In 10 years, they're going to be 68 and not producing very much. We have serious shortages facing us in agriculture.
Right.
Go home and buy some rice.
All right, I'm going to buy some rice. I'm going to buy some oil. No, I'm not going to buy oil. We're producing more oil and natural gas through the shale than ever before, but I am not going to shake Jimmy Rogers out of his commodity play. And Bob Dole sort of endorsed my correction is nearly over. We'll see. Thanks to both of you, Robert Dahl and James Rogers.